Hey Forex traders, Israel coming here from Vintageducation.com, and in today's video we're going to be talking about how to read Forex charts. And literally over the next couple of minutes I'm going to literally give you three surefire ways, three quick ways you can literally start implementing in the next 5 to 10 minutes, which are going to show you how to start making a lot more money right now. So look out for that as we get into today's video. But before we get into that, I want to let you know that we're going to be selecting one special viewer today, which is actually going to be getting this free Forex training shipped out to you on us. No shipping and handling, no printing and posting, literally zero fees for you to pay. So look out later on in the video, we'll talk about how we're actually going to be giving this video training away to one special viewer. So obviously you can see me, I'm obviously recording my screen now, and we're going to be going back and forth. So 3 tips that you can literally start using right now to get into reading the Forex charts. And number one, the first thing we're going to talk about in today's video is we're going to be talking about using the right visuals. Okay, so as you can see here on the chart, typically you get 3 options when it comes to understanding and reading the Forex charts. Now it's really important that you understand what you actually look at plays a really big part on how you actually view that and how you actually analyze it in regards to making a decision. So what you can see now is basically the common view, more of an original view, which is a line view. Okay, now here this is MetaTrader 4, but it should be quite straightforward whatever platform you're using. So you can obviously use line view, which I wouldn't recommend. The second thing you can use is ohlc as they call it, which is open, high, low, close. But the third thing option is one I'm going to recommend is candlesticks. Okay, so when you're looking at charts, the first thing in regards to understanding it is make it look the most appealing. Why? Okay, because line charts, as you saw first and foremost, doesn't give you the full picture. Okay, now whereas candlesticks and ohlc are pretty similar, okay, in what they tell you the same information, but the candlesticks give you the most visually appealing look. Okay, you don't want to be looking at something when you're looking at charts and saying to yourself, okay, this doesn't really look appealing, it's really going to put you off. But if you start looking at something which is more beneficial, okay, then this is what you should be looking at, okay, because it will allow you to easily identify and analyze the markets. Okay, so for example, when we can see here, this is candlesticks. Okay, I selected it here. One thing I like to do, you might see different colors. You can use red and green, which is what I like to do. So red candles show where price is moving down, green candles show where price is moving up. Now you might get green and blue, red and blue, white and black, different colors. Okay, but I feel this is the most visually appealing when it comes to looking at the charts. Okay, so number one, make sure you're looking at the right thing. Candles. Okay, so why candles over line chart, ohlc? Well, I'll go with candlesticks and ohlc first. Like I already mentioned, they literally tell you the same pieces of information, but the difference is candlesticks just look better. Now when we get to candlesticks against line charts doesn't give you all of the information, and when it comes to reading Forex charts, you want to have as much information as possible. Okay, so when we look at these candlesticks, there's really a couple of elements in regards to the candles. So if we look at, let's just say this particular candle here, the immediate previous candle, okay, you can see that it was a red candle, it moved down, but we see this long tail on the top side of it. Okay, now what that tells us is the market opened, okay, at the top of the red line, okay, at the top of the red bodies, okay, right here, and it started pushing up. Okay, but what price did is it pushed all the way up to the tip and then started coming back, left behind this tail, okay, or some people call it a shadow or a wick, and then proceeded to push down. Okay, and you can see there's a little tail on the bottom side of the candle as well, but it pushed down and pushed back a little bit. So when it comes to candles, it will not only show you where price opened on a particular data you're looking at, it will tell you and show you that price actually moved up before current moving down to where it ended, or it will show you that price moved down before ending higher. I'll give you an example of that here on the chart. So look at this particular candle here, for example. Okay, you can see that price opened at the bottom of the body, okay, pushed down, left behind this tail, came all the way back up, pushed up a little bit, came back a little bit down, and this is the body. Okay, so it moved up from here ultimately to here, but before doing that it moved down a little bit and moved up a little bit before it concluded with that body of the candle. So it not only tells you where it opened, it tells you where it went to at its lowest, it tells you where it went to at its highest, and it tells you where it eventually closed. So if that piece of information, that you're leaps and bounds ahead of those who are just looking at line charts and looking at, okay, price went from here to here, from here to here, without giving you the full context. It's sort of like just looking at, or someone telling you a story with figures, but not actually giving you the insights into how the numbers and the figures actually panned out. Okay, so that's number one. Make sure you're using the right visuals when it comes to looking at charts. Okay, number two, in regards to this video today, how to read Forex charts, this is another great insight that you can start using right away, and that's literally using more than one time frame. Okay, a big mistake that a lot of Forex traders make is they'll come into the charts and say, okay, you know what, I'm going to use the 1 minute chart and trade off the 1 minute chart. I'm going to scalp or anything like that. Or another popular thing you hear today is, and over recent years, I'm just going to look at the daily charts. That's it. You don't need anything else. Okay. Then you've got some people that say, okay, you know what? No, I'm going to look at the 15-minute charts and that's it. But what I'll actually do, and what I've been teaching my students to do for years is use multiple time frames to make your decisions. Why? Because I want to have the full repertoire of insights when I'm making my trading decision. Think about this. Using minimal amounts of time frames is sort of like going to defend a case, like a lawyer going to the case and saying, you know what, don't give me that piece of key evidence that can help me win this case for you. I just want to win with the information I've got now. Okay, not really the smartest. Okay, what you want to do is be the lawyer that says, you know what, I want all of the key information. Okay, not just a minute time frame or 5 minute time frame or 15-minute time frame or 4-hour time frame or a daily time frame, weekly time frame. I'm going to use all of them together. 1 hour, 4 hour, daily, 15-minute, 5-minute, all of them together, and I'm going to make the best decision. Okay, so next time someone tells you, look, only stick to this particular chart, only use that particular chart, just tell them, look, why would I make a decision without taking into consideration all of these different options? Okay, I generally, because I'm an intraday trader, what that means is I'm trading through parts of the day. Okay, I want to spend time looking at the 15-minute charts to make my trading decisions. But okay, I use hourly charts, 4 hourlies, dailies, and all that kind of stuff to make really solid decisions in regards to the trades I might take on a 15-minute chart on any given day. Okay, I'm using all of the evidence and then making my case. I'm not like the lawyer who says, you know what, I'm actually going to just use one piece of evidence and make my case. No, I'm going to use all of it so I can have the best possible case, and I'm actually going to have the best possible chance to win that case. In this example, it's winning a trade. Okay, so number two, make sure you're using different time frames in order to give you context, because I'll give you this quick example. For example, so you might look at a daily chart and you can see that, let's just say from 2018 January, okay, price has been moving down. Okay, so we already know that the USD JPY in this example is moving down. I've got that information from the daily chart. Now I'm going to go into the 15-minute chart, okay, which is what I want to trade with every day, and you can kind of see just quickly here, look, okay, the last 4 times, let's make this black, the last 4 times price has come to this particular region, okay, price every time has dropped. Okay, and really it's even more times than that, because we'll count this one, so it's really 5 times. So what does that tell us? Well, we know that the market is moving down from the long term. Now we're looking for opportunities on these particular time frames, 15-minute charts, to literally find the opportunity. We've made that analysis. Okay, you're not going to see this specific piece of data, this key piece of evidence, so to speak, on a daily chart. You just can't see that in this specific precision. Okay, now what I might do is, I've got this analysis on the chart. Let's go to the 5-minute, and you can see in really great detail what specifically price is doing. Now, I don't generally trade off 5-minute charts. I'm more of a 15-minute time frame trader, but this is the next level in real precision. Okay, so what I might say is, the next time that price comes to this region, okay, maybe it's later on today, I want to see something like this happen. Okay, a small opportunity in price for me to actually get a trade on. Okay, and we can talk about stop loss and take profits in another video, but looking at something like that, I've used the daily time frame to identify which way the market's going. Now I'm going down to 15 minutes and 5 minutes to really look at the precision and the greatest opportunity. Why? Because these are the opportunities that's going to give me the opportunity to get the less risk on this trade and the maximum reward. The more risk, the less risk I have, the more my profit potential opens up. Okay, so what have you focused on so far? Focus on number one. Okay, make sure you're looking at the right kind of charts. Okay, visually. Okay, candlesticks. Number two, don't just take one piece of data. Use multiple pieces of data, multiple time frames to make a valid decision. Okay, the third thing we're going to talk about in today's video of how to read Forex charts is something really beneficial, really exciting, and something really easy to use. Now, the third thing I'm going to say is keep your charts extremely clean. Okay, what we're talking about in today's video, okay, don't forget how to read Forex charts. Okay, so if I turn around and say, you know what, look at all the analysis I've done it quickly in a couple of minutes, and something wasn't telling me what to do. I literally just did it because I'm reading the charts, what it's actually showing me. If I turn around and say, okay, look, let's start adding something. I don't even know what they are because I don't even use them. Okay, so let's say, for example, we're going to put on some Bollinger Bands. Okay, then we're going to put on, another people like to put on, we'll put on some volume. Okay, and then let's put on let's look at moving average. Or in fact, let's delete this one, we'll add something else. Let's use a MACD. Okay, do you see what's happening straight away? Okay, now what we're supposed to be doing, which is reading the charts. Okay, now about 50% of the chart real estate has been taken out by something that's now telling us how to read the chart, or telling us what the chart is doing. Okay, it defeats the whole purpose. We're supposed to be reading the charts, but what we've actually in fact done is overlay the chart with things. So imagine this. Okay, imagine if you're supposed to focus on a particular image, but what we start doing is we start putting hands in front of the image and different things in front of the image, so now we can't actually see the image. Okay, although we think that it's helping us, it's actually prohibiting us from actually seeing what's actually happening. And this is a mistake a lot of Forex traders make. They start relying on these different indicators, Bollinger Bands, MACDs, RSI, all of this kind of stuff, and they think that's actually going to help them make money. But it's not, because it's actually overlaying, it's covering up the chart, which is actually what you want to actually see. Okay, because now when I'm looking at stuff, I'm saying, okay, now which way is the market going? There's a lot of volume in the market, it's oversold or it's overbought, all of this kind of technical babble, okay, that people talk about. Okay, the Bollingers are XYZ. Okay, it's at the bottom or it's at the top. All of this stuff is confusing to the eye, and it's not actually something you need to do. What you need to do instead is, okay, take all of this stuff off, okay, and let it be completely clean for you to identify some of the stuff I'm talking about, and you can actually see all of the charts in its totality. Okay, so those were 3 quick things that you can literally implement to help you understand how to read the Forex charts. Okay, and again, I'm literally about to talk about how we're actually going to be giving this away to someone, but just to wrap up, number 1, we talked about actually making sure you're visually looking at the best, most appealing thing, okay, which is candlesticks. Number 2, we talked about using the whole insights, okay, not just sticking to one particular time frame, but using multiple time frames to help you identify what way the market's going, where to enter the market, and actually how to enter the market with least risk and max reward. And we ended up this video, number 3, talking about keeping your charts extremely clean and not overlaying them with things that are actually prohibiting your view from actually seeing the chart. Okay, that's 3 quick things. Implement them all straight away, and I guarantee you start getting better trading and actually trading better. Okay, now to wrap up today's video, how is one particular person going to be given this free special DVD on us. Okay, but all you have to do, okay, to be selected and to qualify for this is, number one, make sure you like the video, okay, below, okay, hit the thumbs up. Number two, if you're not already, subscribe to the channel and hit the bell notification so you get notified instantly every time we produce and publish new content. And number three, leave a comment below this video about anything related to this video, what you liked, what you didn't like, anything XYZ, and we're going to select one particular person that completes all three of those tasks: likes the video, subscribes and hits the bell notification, comments below this video. We're going to be selecting one of you very soon and actually shipping this out to you on us. No shipping and handling, no printing and posting, literally zero, zilch, nada. So hit the thumbs up below this video, subscribe to the video, subscribe to the channel if you haven't already, make sure you hit the bell notification, and number three, leave a comment below this video right now about anything related to this video, and you might be the lucky person, as they say, who gets this particular Forex training on us. Thanks and take care, and all the best of your Forex trading.